Welcome to the business interview. I'm Marcus Carlson. This week, we're in the Swiss Alps at the World Economic Forum here in Davos. This event brings together business leaders from around the globe, and one of them is Adi Godrej. He is the chairman of the Godrej Group, one of India's biggest conglomerates. The group has its fingers in many pies: appliances, consumer products, real estate, healthcare, just to mention a few areas. I suppose it's fair to say that a lot of Indians have grown up with at least one Godrej product at home.
Yes. 600 million Indians use one or the other of our products each day.
Okay, so you certainly have your finger on the pulse of the Indian economy. I want to talk about the Indian economy in just a moment. Thank you for joining us, first of all. I want to start by asking you about the World Economic Forum. This is usually seen as a good place to get a sense of where the global economy is heading. What's your sense when it comes to that? How strong do you think that the global economy is at the moment? What kind of impressions are you getting from your fellow business leaders?
You get a good picture of what's happening in the annual meetings in Davos. And clearly this year it's a mixed bag. Some countries like the US, India seem to be doing better. Some parts of the world like Europe and Japan have question marks around them. China seems to be slowing down, although the Chinese premier's speech yesterday indicated that he's quite bullish that China won't slow down very much. And I think generally the mood is that things can improve. We should discuss what can make things improve.
Why do you think there is this chill in the global economy at this stage? What's the reason?
Partly because of some of the problems Europe has been facing, with Greece going to the votes soon, considerable slowdown in Europe, the problems with the euro, etc. Partly with Japan not being as successful with its reforms as was expected. And generally, developing countries are not doing as well as they were.
I want to ask you then about the Indian economy. We met in Mumbai a little bit more than a year ago, at a time when there were some concerns about the direction of the Indian economy. Now those concerns seem to have gone away, at least from the outside, and there's a sense of optimism, as I say, at least from the outside, regarding the Indian economy. Do you share that optimism?
Oh, tremendously. The situation in India has changed dramatically after the elections. The new government is the first government in 30 years to have a single-party majority in the lower house of parliament in India, which is a very good thing in terms of legislation. It's very committed to reform and growth. It's also very committed to raising the standard of living of the low-income Indian population. So overall, we're very excited. So many of the steps they've already taken in about this 8 months in office this government have been very positive. We're expecting the budget, which is a major announcement as well as indicator in India at the end of February. And everybody in India and many people outside India are very positive about the Indian economy.
What then do you expect from the government and its budget? How can the government, led by Narendra Modi, continue to build on this foundation that you talk of?
Well, his major motto during the campaign was maximum governance, minimum government. And I think he's living up to it. He wants to get the government out of the picture in many cases so that it doesn't become a hindrance. He wants to make sure that the bureaucratic hindrances India faced over the last 5 years are minimized very considerably. He wants to bring in a lot of reform. One of the biggest reforms which will help the Indian economy has already been taken up in Parliament. There will be a constitutional amendment on that which will be voted upon in the next session of the budget, the budget session of Parliament. And that is the goods and services tax. This is a reform of our indirect tax system. And when put into place, it is expected to add 2 percentage points to India's GDP growth rate, other things being equal. So it will be a tremendous reform for the country. And I think that will come about. Many other reforms have been instituted. And we are very positive about the future of the economy. The Indian stock market is at all-time highs and going up almost every day. And most Indian companies are planning for a very strong future.
How strong do you think that this Indian resurgence is For instance, India has benefited from lower oil prices, or is benefiting from lower oil prices. If oil prices go higher, for instance, is there a risk that this resurgence could be derailed?
Well, of course, the commodity prices coming down has been very helpful, not just crude oil prices. Crude oil prices, of course, is very important for India. That is very beneficial. But many other commodities like coal, iron ore, vegetable oils, which are big import items in India, have also come down quite considerably. So India has benefited. It's unlikely that crude oil prices will go up. Most of the analysts expect the low prices to remain for quite some time. Of course, they will fluctuate from time to time. So this is definitely beneficial to the Indian economy. And we expect this benefit to continue for some time to come.
Now, you mentioned China's Premier Li Keqiang earlier. The IMF has suggested that soon India's growth rate could actually pass that of China. Do you think that there is an opportunity here for India to become the growth engine of the world and of emerging nations?
Yes, two things can happen. One is, I expect that by the next financial year, Indian financial year, which is 16-17, not 15-16, India will become the fastest growing major economy in the world. Mm-hmm. We will overtake China's growth rate and get to a growth rate of around 8%.
Is that because of Indian strength or because of Chinese weakness?
Combination. Mm-hmm. Also, we expect that the growth rate will keep accelerating, and it is projected now because of our demography. We are one of the youngest major economies in the world. Because of our demography, by 2050, it is projected that India, by purchasing power parity, will become the largest economy of the world. First, currently we're the third largest by purchasing power parity, but by 2050, we expect to overtake first the United States and then China, because before that, before 2030, we expect China would have overtaken the United States.
Now, the Indian government has said that it wants to become, or that it wants India to become a manufacturing base. A little bit like China. China is often called the factory of the world. Do you think that India can emulate China, and is that something that India should aspire to do?
Well, we should certainly increase the salience of manufacturing in our GDP. Currently, it's a very low 16 or 17%. We should try and bring it up to 25%. Of course, in China, it's much, much higher. Mm-hmm. So we are also a very strong service economy. So whilst we try and improve the manufacturing salience in our GDP, we should not forget that our strengths in services, especially things like IT services, outsourcing, etc., are maintained. And we should also have a tremendous emphasis on our agriculture, which is also possible to grow very considerably. So India is too large an economy to say that it should be based on one thing or the other. But manufacturing has not been paid sufficient attention in India, and this government's accent on manufacturing is very welcome, and I think manufacturing will grow, but I don't expect it will be as big a part of our economy as it is in China.
I want to talk about your own group a little bit, the Godrej Group. Will you be able to tap into the Indian growth story?
Yes.
Are you in a good position to do so from your perspective?
Tremendously. We are already, our strategy team is already planning to improve our projected growth rates. Our objective in our group is what we call 10 by 10. In 10 years' time, we want to be 10 times our present size, which is a compounded annual growth rate of 26%. This we expect to achieve partly organically. We expect organic growth of about 15 to 20%, including our operations outside India. About 30% of our manufacturing is outside India.
And I take it acquisitions are also on the cards?
Also acquisitions. So the rest of it would
be... Where will those acquisitions take place?
Those acquisitions will, some of them could be in India, some brand acquisitions, etc., but most of them will be in developing countries outside. So we are not keen on acquiring businesses in the developed world, but we are very keen on acquiring businesses in Asia, Africa, and South America. We already have considerable manufacturing in these geographies.
Those are the geographical regions that you're looking at?
That's right.
Now, what kind of risks do you see to your business at the moment? What are the risks, and what's the worst case scenario, so to speak?
Well, the worst case scenario is India does not fulfill the promise it is showing currently. So in which case, perhaps our 26% compounded annual growth rate will reduce a little. The second could be that if any major geopolitical developments, especially terrorism, the ISIS movement, the Taliban movement, the problems in Pakistan, which is a close neighbor, etc., could be a problem. But none of them would be very serious problems to our mind, but that they could come in the way of achieving the full potential that we see the country has.
All right, Andrew Godrej, the chairman of the Godrej Group, I want to thank you for speaking to France 24 here in Davos and at the World Economic Forum. I want to thank you at home for watching. Do stay with us here at France 24. We have more news coming your way.